What's up, guys? On today's episode, I'm actually sitting down with my CPA, and we're talking about a few different tax advantages that happened in 2019 that if you didn't take advantage of, you're going to be kicking yourself because next year is going to be your year. So make sure that you check all this stuff out and learn some of these quick tips. Plus, make sure you have 2020 all set up, which is what we go into. Check it out. Hey everyone, welcome back to Contractor Growth Network. I'm Logan Shinholser, and today, instead of sitting down with Alex, I'm actually sitting down with Edin Cuskovic.
Hey, what's up, everybody?
So Edin is actually my CPA and bookkeeper, and I brought him on because Edin, as a CPA, is very, very savvy in the sense that you have, what I learned is you kind of have like two different kinds of CPAs, those that just make sure they check the boxes and that you don't go to jail and they play super conservative. Then you get those that are kind of not pushed in the envelope, but they're being pretty smart and they're thinking outside the box. And Edin definitely fits the latter category as far as thinking outside the box, really thinking about ways that you can lower the taxes, do whatever you can to set yourself up so that way you're maximizing all the, I don't want to say government hands out, but
Well, I mean, there's a couple of things. There's either deductions, you want to get the most deductions that you can. There's also some credits that a lot of people don't get that they're entitled to. And then there's just different strategies that not everybody's aware of that you can use. The way I always look at it is there's a number of categories. There's the deductions, the credits, and then there's what I call tax-free money. So there's some ways that you can extract money out of your business that you get the deduction on one hand, but two, you get the cash. So most people always think about, let's just go spend money. Let's go buy stuff. Let's buy equipment. Let's buy tools. Let's hire people. Mm-hmm. And that's all great, and that'll get you hopefully further in your business. But then there's also things you can do to extract money out for you and help you also pay less tax. So that's kind of the way I look at it is how can we first get the tax-free money, then get tax credits because credits are better than deductions. And then let's go to the deductions as our last step and see, what do we need for the business to help it grow, and does it fit with where we are today? I've had conversations with people where they're like, oh, well, I just want to spend money right now. Mm-hmm. Okay, cool. How's that going to help you grow your top line? How's it going to grow your business and get you to that next level? Don't come to me and say, hey, well, I just want to pay less tax. If that means you're going to increase your debt, you're going to have to take out more loans, spend money on your credit card, because that doesn't make sense. Then you're going to be in a hole, and you're not going to be able to hire the next person. You're not going to be able to actually go and spend money on marketing to get more customers. So it's about being smart with your allocation of resources.
It's funny that you put those in that order because like deduction as like a small business owner, you always think like, oh, this is tax deductible. But that was as far as like in like the order that you put that in, that was like, oh, and lastly, deductions. So it shows you how much I know, and maybe other people out there know it and I don't, but like shows you how much I know about like how important this stuff really is. So
yeah, it's also one of those things most small businesses, I'll start there, people who just start out or even have been in business for a couple of years, they think everything's a deduction. Mm-hmm. So everybody is like, oh, well, I bought this and I bought that. Everything's a deduction, and that's not true either. Mm-hmm. So part of what we're talking about today is also setting us up for next year a little bit and just having those conversations and figuring out, okay, can I actually write this stuff off? For example, I'm in professional services, but when I go out and buy a suit or a shirt, even though I need that for my job, that's not a deduction because I can use that in everyday life. Likewise, I have a lot of women as clients who think getting their hair done and getting their nails done is a deduction, but that's not a deduction because you don't need that to have a business and to get customers.
Unless you put like your logo on your nails, right?
You couldn't even
use it as advertising?
Yeah,
oh, really?
Even that's a hard one. Your nail, if you're doing nails, if you're a nails shop, then it's more applicable to you. But if you're a contractor, I've seen some really successful women contractors out there, but their nails have nothing to do with the business of contracting. It's not something that they need in order to actually get clients and get revenue in the door. So that's a really hard one. There's actually, this is going off topic here, but there's actually been strippers who have had to fight the IRS in court for things like breast enhancements.
Really?
Yeah, and they actually ended up winning because that is it's not necessary, but for some of them, it's necessary to be able to get clientele and get money. So that's, again, a little extreme example, but got to have a little bit of humor here too, right?
Yeah. So let's do this. Before we jump into all this stuff, give us your background, because, you have a very unique background. You were on the podcast a year ago.
Correct.
So
number 28, I had to look it up.
Was that what it was?
Before I came in, yeah.
I think now this will probably be like it's like 80 something.
Yeah, you're way up there.
Yeah, we've been pushing these bad boys out. So walk me through your background.
Yeah, sure. So I was born in a tiny little country called Bosnia. My family immigrated to the U.S. in '99. I was 10 at the time. And then a couple of years later, my dad started a contracting business. And so that's when I had to start learning about taxes and accounting, because I had the most time. I was, I think, 12, 13 around the time. And from there on, I was always interested in business, and ended up going and studying econ and finance. I don't even have an accounting degree, but it was always a natural fit, because you got to know your numbers no matter which line of business you're in, no matter what you do. And so I naturally gravitated back to that. And the second derivative of that is taxes, because you want to pay the least amount of taxes. So I always was interested in that. And that's then how I ended up getting started, doing some consulting for small businesses. And the conversation was always back to taxes. How do I pay less tax? What do I need to do to grow my business? What do I need to do to position myself the best possible way? And then it goes into a greater realm of, okay, how do I make more money, keep more money, and then protect that money to be able to give it to my kids, grandkids, whatever. So that's sort of the high-level overview of what I do now. It's as basic as bookkeeping, and as high level as some really unique strategies for high net worth families and business owners on, again, keeping as much money, protecting it, and moving it to the next generation.
So working pretty closely with the world of contracting, I start to realize like how many small business owners, and not just contractors, because it's like small business owners as a whole, but how many contractors, actually everybody, nobody seems to know their numbers. Like nobody knows like how to job cost. Nobody knows at the end of the year how much money they're making. They know the top line. They know that, hey, this year I made $400,000, but then when you say, okay, well, what did you actually put in your pocket? It's vague, and either they are like lying and they know what they made, or they have no idea. So how was your dad growing up? How was your dad at knowing the numbers, or at least being like diligent enough to like understand that you have to like know this stuff to have a fruitful business?
Yeah, so you bring up a good point, and I think the answer to your latter comment of either they're lying or they just don't know, that's the truth right there. Most people don't have a clue what their margins are because they've never really looked at the numbers, and they're not making enough. They don't see enough in their personal bank account to go and hire a professional. And the second piece is, they just have money in, money out. It's an intuitive feeling. So to answer your question about my dad, he was always good with numbers, but he wasn't as diligent about keeping actual books and job costing. He never grew the business to have employees, so it was never a necessary thing for him. He knew how many jobs he was getting. He knew how to estimate very well, and he knew based off of that how much he would keep. But to get to that next level, once you start adding other humans where you're responsible for somebody else's paycheck, the world changes. You need to know that, because to estimate those jobs, when it's just you, it's easy, right? Because you know how much you're bringing in, you know how much your materials are going to be, you know how much time you're going to spend roughly, and you know how much you're going to keep. Now, if you got to add on a layer of, okay, well, I got to pay John down there for his expenses, and I got to get a second truck, well, that changes the dynamic, and now you got to think about it more strategically about how you're pricing your jobs. Are you trying to just get in the door to be able to then upsell? What are the other services that you offer? And then are you good enough at selling to be able to do that, where you can take a hit on the thing that you're there with your foot in the door to be able to go to that higher margin service that you offer?
And that's what we talk about here all the time, is that getting that foot in the door offer, where like if you have to go in with a promo to get more clients, like it's not necessarily a bad thing, but if you're going to if you're going to mark your kitchen renovation off 50%, which means you're taking a $25,000 hit, you better make it up on the back end. You better track if you're making it up on the back end, because the $25,000 hit turns into, a few $100,000 worth of work. It's good, but
but how many people are doing that?
None. Yeah, I mean, that's the hell of a sale.
Issue,
yeah.
Right.
Yeah, that's a tougher one, but still, it's the idea that, like, if you don't know your numbers, like, how can you possibly go through and track this stuff to understand, like, are you ROI positive? So yeah, it's a lot. So let's go ahead and jump into, like, some of, like, the tax. Well, how do you want to play this one? Because what I was about to say, tax deductions, but I know that's like part 3 of this. So walk me through some of the things that a lot of us small business owners are probably missing out on right now that could make, like, a pretty quick impact in our lives.
Yeah, and so I'm going to answer or add some more commentary on that last piece about knowing your numbers and giving that.
Hit me.
The reason people don't do it is it takes a lot of effort. It's unbelievable how much time this takes, because it goes all the way from your estimates to your invoices to then actually keeping track of time and materials to get to that end number. That's why most people don't do it, especially in contracting. Yeah. Because you're usually out in the field. You're not in the office punching those numbers in. Chances are you hired an admin who's great with filing paperwork, sending out invoices and estimates, but that admin's not going to know how to job cost for you. So it just takes a lot of time, and if you have a family, most people decide to just ignore it. And again, that intuitive thing just comes back. Like, oh, I intuitively just know where I'm at, and that you're not going to grow your business with intuition.
Right.
So now going to the tax side. Let me start off with, like, the easiest thing on the tax-free side that a lot of people miss. And it depends on how big you are, if this is going to work or not. But your vehicle, for example, I use mileage reimbursement for my vehicle. So every time I'm driving around, I came here today, I get a mileage reimbursement from my company to me. The company gets a deduction. I get tax-free money out of it. Doesn't show up on my W-2, doesn't show up on my personal tax return. It's just money from the business to me, tax-free.
So I always thought it was like you got, like, mileage. I thought it was more gas, or is it like either or?
It's either or. So you can either deduct the actual expenses of your vehicle and then include some depreciation on the vehicle, or you can take the mileage. The mileage rate includes gas, depreciation, repairs, and stuff like that. Oh. So that's sort of the easy route to take, but requires way more record keeping, because then you got to keep a log of, okay, on this date I went here, I went there, and then you got to keep the log of why you went there, who did you meet, and again, it's got to relate back to your business. Is it what the IRS always looks for? Is it ordinary and necessary for your business? That's the key kind of proof that you got to show in order to get that deduction. Now, there's one more derivative of that, which is the next tax-free easy money situation, which is a home office. So once you have a home office, every business trip you take from your house is eligible for a mileage reimbursement. But if you don't have a home office, that first trip that you're taking somewhere is considered a commute. And so now you can't write off that first trip, because it's just like if you had a W-2 job. When you go to your W-2 job and come back home, you don't get to write off that mileage.
Right.
So the same rules apply here, where if you don't have that home office, they're expecting you to go to your physical office first, and then the next trip is going to be a write-off.
Oh, okay. So if I have this right, so if you have a home office, but then you also have, like, what we have is we have an office here. If I were to, like, then drive into this office and then go, okay, let's go to the job site, I only get to write off from the office to the job site.
No, because you have a home office.
Right, but I'm sorry, you're right.
Yeah. If you don't have the home office, then yes, then it's like your trip from your home to your main office is not deductible. But then if you leave your main office and go out to a job site or a customer or the bank, your accountant, whatever, those are deductions. And then whatever your last trip is, doesn't matter from where, back home, is also not deductible.
So what about if you're not going, like, for me, like, I'm not going out to a job site every day. Right. If I'm driving if I have a home office and then I come into here, is that not just a commute, or is that deductible?
No, that's deductible, because now you have a home office, and that first trip, now you're leaving your home office to go out somewhere.
Is there like you have to spend X amount of time at your home office for it to qualify?
Yes. There's some paperwork that needs to happen behind the scenes to qualify it. And then the general rule of thumb is you need to spend 10 hours a week doing administrative duties from home. So running payroll, doing estimates for customers, sending those invoices out, calling, following up on leads, doing your marketing. There's a few other things that are administrative in nature that you can do from home rather than the office in order to get that qualification. And again, you are supposed to keep track somehow. Currently I use this thing called T-Sheets as a time log software, and that time log software reads your IP address. I'm getting probably way more technical than anybody cares, but it reads your internet address at home, and that's how it tracks which location you're at. So if you get audited, if you pull that log, now I've clocked in at my home IP address.
Sure.
And now I have proof that I was there, I was working. Now, again, how do you prove that you didn't just clock in and stay there?
Yeah.
That's beyond today.
Yeah.
There's other tools to do. I use another time tracking tool that I'm probably going to switch to from T-Sheets called TimeCamp.
Okay.
And with TimeCamp, it actually reads what you have open on your computer, and it kind of job costs for what I do. So if I'm working on full sale marketing QuickBooks, it'll actually read that I'm working on full sale, and it'll log it back to full sale.
So it'll that's just like the next level up to go, hey,
Right.
IRS, I wasn't.
Right.
Because I know what you could do in, this is big in like with finance and stuff. Like I know like Aldrich be online all the time, and like other people do, and you can actually go out and buy mouse jigglers. Yeah, which is big in the gaming world too. But yeah, you can just go out there and get one of those that keeps it up.
Yeah, so TimeCamp will actually notice that as well. Like it'll notice that you're not moving your mouse.
Oh.
And it'll put it into timeout, or call it distracted time.
Oh wow.
That you're just sitting there not doing anything. So it's pretty impressive. And the reason I wanted it is I have ADD. So I'll get distracted. I at all times have 10 plus windows open in my browser. It's just terrible.
So that's probably a pretty good thing to use if you have like a virtual assistant too.
Yes, absolutely.
TimeCamp.
So anything that where you're trying to track time, somebody doing some productive. I mean, this for the computer, it's a little harder for guys out in the field. But for me, the main goal was one, obviously I want to see how much I'm spending on my clients.
Sure.
Because it goes back to my pricing. So as I'm going out and bidding on jobs, I want to make sure that I'm analyzing the situation properly and then pricing correctly so that I can cover my overhead, cover my employee, and make money.
Sure.
That's where that's really coming from. And then, again, my personal time, I feel like I'm working way too much and it's going somewhere, I don't know where. So I figured I need a mechanism to tell me, and there's just like your profit and loss statement, this is a time statement of, okay, out of the 60 hours that you felt like you worked, what did you really do? And if out of my 60 hours, 20 hours are distracted time and I'm just around, then that's a problem on me. That's not my pricing. That's not my customers calling me. That's me. And so I want to know that so I can make adjustments in my schedule.
Again, it's probably pretty good just to have something like that to know how long you're really working on like estimates every single week.
Yeah.
Because kind of like back to the whole, like we have that whole CSA side, that we like help out with, but their whole thing is like you should only be really working on the stuff of people that are like not ready to move forward, but like at least in the same ballpark, because the amount of times that, you drive out there, you say, hey, look, this is what it's going to cost, but you come home, work with the bid, send it over, and they ghost you. You just spend an hour and a half on this bid, and you're at $75,000 for a kitchen, and they're thinking 15.
Yeah.
So knowing that stuff on the sales side of things is going to you can really go through and understand how many bids are you working on every single week that end up not going through.
Right.
And what could you, so if you learn how to pre-qualify a little bit better, what could you do with those extra 7 hours each week, whether it's work on the marketing, work on building a team, or spend it with your family?
Yeah, that's it. I mean, time is the most valuable thing we have. And how are you going to leverage that? So for me, it's all technology. What you're talking about right there is, do you have a CRM system where you're logging, okay, this is how many people I got in.
Right.
This is how many people are in the qualifying stage, how many people am I moving along, and how many people are just dropping off. And CRM is expensive, but that's where you get that data from. I mean, you can keep a spreadsheet, but you're going to spend way more time. And is your time worth more than the money of that software?
Right.
That's for my business, I spend the most amount of money on software. Nobody believes me.
I believe it. Because I spend a lot. I mean, I have a whole software. I mean, you run my numbers. You see how much I spend. I mean, I think we spend right now on just software. It's like, I think we have budgeted each month like $2,000.
You're right around that number,
Yeah, and I'm like, I don't need this software. Then I'm like, well, this is only like $100 for the year.
Yeah.
But all the different things, they add up.
They
It's
do.
like, well, I need this for that. So it's very easy to like, go, well, this is just like a one-time software hit.
Right.
But then like, when I have 12 different one-time software hits each month, it adds up. So
It does. But again, it's even this is one of those things that you and I are going to talk about with your business is which one of those are actually helping you? Which ones are
Right.
you using? I've noticed with me, I sometimes do that too. I'm like, oh, this sounds like a cool idea.
Yeah.
And then I don't use it.
right.
And then I go, okay, well, it's renewal time. Let me actually drop it. Yeah, it's just $100, but I don't need it.
Yeah.
So that again goes back to how you started off. Do you know your numbers? Are you tracking stuff? Are you then reviewing
Right.
and making decisions based off of that?
Yeah. Interesting.
Yeah.
Yeah. All right. So that's some of the home office stuff.
Mm-hmm.
And obviously, like, just real quick, to have what qualifies as a home office?
It has to be a dedicated space.
Okay.
So if you don't have a dedicated space for just your office, it's not going to qualify. So your kitchen table doesn't qualify. I mean, if you have a little nook area, sure, you can call it
Like
that.
block it off and
Yeah, you want it to be blocked off. It's not allowed to be used for anything else.
Mm-hmm.
So if you keep it also as storage or some other stuff, or you have when people come over, that's your guest bedroom. Again, is the IRS going to come knock on your door and ask about it? Probably not. But they could ask for pictures and proof.
Right.
And then you got to go through the troubles of, okay, let me move everything out, rearrange it, set it up as a home office. So it's supposed to be a dedicated space. And again, with the spirit of exclusive use for your business. If you have multiple businesses or you and your spouse have a business, you guys cannot have the same home office. So now if you use one bedroom as a home office, you could get a divider and say half of that room is my spouse's, half is mine. That's cool. Again, it waters down your deduction.
Sure.
You want to now talk to your accountant, CPA, whatever you're using, and saying, okay, well, does it make sense for us to split it? Or is one of our businesses doing better? Does that business need more of
Right.
the deduction? So that's going to go back to our conversation about being proactive and having these conversations throughout the year rather than, okay, here's just my tax stuff, do my taxes.
Sure. Okay. Cool. So we got the home office stuff. Is there
Mm-hmm.
anything else for 2019 that we should be aware of that makes sense?
Yeah, absolutely. So this one, what doesn't matter about the home office,
Okay.
but there's this really neat rule within the tax code that allows anybody to rent personal property up to 14 times a year and not have to pay tax on that rental income. So it depends on how you're set up legally for your business and tax-wise, but you can have monthly board meetings or monthly retreats at your house. Again, no matter how big your home is, if you have a home office or not, up to 14 times a year, you can have a meeting at your house, and you personally would invoice your own company, and the company would pay you for having rented your home for these meetings. It's called the Augusta Rule. Comes from the Augusta Golf Tournament, where a lot of people around there would rent their houses or a room in their house to people as they're coming down for the tournament, and somehow it passed legislation that up to 14 days were tax free.
So how would that work? So let's say I want to do like a monthly board meeting. If I'm just like a solopreneur, does that still count?
It does when you say solopreneur. It
Like if
depends
it's-
again on how you're organized
okay.
for tax reasons. You can do it pretty much any way. Just the way you want to document it is a little differently. If you're a sole proprietor, you can still do it. You just don't have board meetings as a sole proprietor, right? So you need to maneuver around that. You can't call it a board meeting. You don't have a board. You're not a corporation.
Sure.
So just some small technicalities, but the spirit of that rule still works for you.
So then with that, so let's say we do this like, the month or the 14 times in the day. Is the whole point of that is because I'm invoicing the company, I then end up just saving money on like, payroll tax, Medicare, Medicaid, but I'm still paying normal like
No.
federal and state.
No, you're not.
Oh, really?
No, so this 14 times so your company can choose to go to a hotel and rent a conference room, right?
Right.
And so hotel would invoice you, say, $400 for a 4-hour time block in their conference room.
Sure.
Your company pays that $400 to a hotel, and you get the deduction at the company level. Same deal here, except instead of going to the Hilton, you're doing it at your house.
But the Hilton is still having to pay taxes to the government for that.
Correct, because they're renting more than 14 days out of the year. You personally are only renting your house 14 times. So now you're supposed to get a 1099 from your company, but then you deduct the full amount of how many payments you received as a deduction. So your net income from rentals is zero.
So if Logan invoices Full Sail for 14 days at $500 a day,
Yep.
so that's $7,000. That means that Logan is actually making $7,000 tax-free, and it's deductible to the business.
Absolutely.
Oh wow! So you're actually making. Oh wow, that's a lot more.
That's the tax-free
Damn.
bucket.
Damn. Okay.
Yeah. So those are small things that a lot of people don't know about.
It's not that small. That's a pretty solid one because like you could pay yourself normally. So how does it work? Like, so what do you like rate it at? Like how do you know? Like do you have to like do research into like the area and go, what does the Hilton cost? And I can only do 4 hours a day, or
Correct. So you got to have proof that the rates that you're charging your company are reasonable.
okay.
How do you determine that? Is you go out and you get bids at hotels and other people who provide conference rooms. So like Regis, I think, will rent you a room at an hourly rate. You can call Regis, say, hey, what does a 4-hour time block in your conference room cost? What I do for a lot of my clients, including for you, is one of my employees, every month, she sends out bids to 3 or 4 hotels. And I have clients in different areas of the East Coast. So she'll actually run a basically a request in Richmond, Virginia, Greensboro, North Carolina, Charlotte, and Fort Mill, and we keep a spreadsheet. And so part of my goal for next year is to automate that and be able to email those clients for whom I do this and say, hey, here in your area, these are the rates for this month. And then you can use those rates as proof, and we keep the documentation. We save PDFs.
That's pretty smart.
Yeah. And so again, I'm trying to be next level of actually making it easy for my clients.
Right.
By doing all this work for them. I mean, it takes us 15 minutes.
Right.
We have it on our CRM as a recurring task, whereas I know my clients are going to forget about it.
Yeah, I mean, I didn't even know about this rule until like recently, but that's okay. So, like for example, like for Charlotte, what is Charlotte's rate? Do you know?
They run around $375 a month for a 4-hour time block.
Okay, so $375. Okay, so in essence, I'm getting
$5,000.
Yeah.
Yeah.
Huh. Okay.
Yeah, and then I mean, with that, if you invite other people over, for example, Audrey can be part of that. You can invite
I don't know if I'd want that.
Yeah.
She'd be a tough board member.
And you can switch it up every month.
Yeah.
I mean, it doesn't have to be the same one. But part of, again, creating that proof is also having purpose for those meetings. And it can be as simple as, okay, well, I can't do it at the office because then I'm distracted, right? I have my employees here.
Yeah.
There's always somebody calling, so we're blocking off these 4 hours. And then I've actually done an outline with the different topics that you can discuss at these meetings that I think I've shared with you last week. So again, trying to make it easy of different topics that you can talk about, because a lot of people say, okay, well, yeah, I can. What am I going to do for 4 hours? Right. And again, you got to have proof that you actually had a meeting and what you discussed and what the outcomes were, and then you kind of track it like an actual board meeting.
Right.
So I always recommend inviting other people over, or even conference calling them in. You can pay them if you wanted to. Just keep in mind that then they're essentially contractors. If you pay them over $600 a year for those consulting services, they need a 1099. But then if you order food, if they're actually coming over to your place and you order food, that food part is also deductible at 50%,
so
unfortunately.
You could like throw yourself like a little party.
Yeah.
Okay. Well, I mean, granted, you still have to like.
Yeah. I mean, you pay for it for the food portion, but I mean, it's fun and encourages the people that you want to show up.
Right.
And then hopefully you actually get something out of it from a business perspective, where you're analyzing your strategy, your employees, and the things that have worked, the things that haven't worked.
Sure. Which you should be doing anyway, but now you're at least like getting compensated for it, so it's a win-win.
Yeah, exactly.
Nice. Okay. Well, now I know.
So those are the 3 easy tax-free buckets. So now I'm going to skip over tax credits. Those are a little too complicated. There's quite a few of them. They don't all apply, so that's why I want to skip over them.
What's a tax credit versus a tax deductible?
So a tax credit will offset your tax liability dollar for dollar. So let's say you do your taxes at the end of the year and you owe $10,000. If you get a $2,000 tax credit, your tax liability will go from 10 to 8.
Meaning what you have to pay.
Correct.
Got it.
A tax deduction decreases your income off of which you pay taxes.
Okay, so if you pay 10 grand in taxes and you get a 10K tax credit, now you're paying
That's
nothing
zero.
in taxes. But if you pay, I don't know, like if you made like 60 grand, which means you have to, like, for example, pay 10 grand in taxes, and a 10K deductible just means now you're paying taxes on 50 grand.
Exactly.
Got it. Okay, cool.
Yep. So on the deductible side, I'll relate this to the contracting world in general. A new thing that came out with the tax law changes that started in 2018 was this thing called a qualified business income deduction, or Section 199A deduction. So if you have a qualified business, which in the contracting world everybody does, off of whatever your net profit is, you get a 20% deduction before you pay federal income tax. And now, caveat, there's some income limits. If your household income is above certain levels, and for 2018 it was $157,500 if you're single, and $315,000 if you're married filing jointly. Again, household income, not just your business income.
Right.
So if your total income was above those levels, there's some additional math that needs to happen to see if you get the full 20% or if it's a smaller amount. But most of the people I work with are below those limits, unfortunately.
Sure. Yeah. So, okay. So just to kind of recap that. So you automatically get, like, so if it's 20%, is
Right.
it like...
So let's say I'm single.
Yeah.
I have a painting business. After I pay everybody, all my materials, all my labor, I've made $80,000.
Okay.
Now at the federal level, instead of paying taxes at $80,000, I'm actually only going to pay at 80 minus 20%, which is $64,000.
Okay.
So you get basically a 20% deduction.
And will that drop your tax bracket too? So like if the cutoff is like 75 grand for like the next bracket up, will that drop you back down?
Yes.
Okay.
Yeah.
Okay. And is that automatic? Is that something that, like, if you want a TurboTax, you could do this yourself, or is this like...
You can.
Yeah,
Again, you got to understand the rules. It's a little bit more complicated.
Sure.
One, you got to know if it's a qualified business.
Okay.
Two, if you're above those income limits, it gets way more complicated.
Sure.
And then depending on your assets like trucks and machinery and stuff like that, and wages that you pay, it can get a little more complicated. But for most people in the contracting world are qualified businesses. So they get it automatically. So yeah, I think you can do it within TurboTax.
Okay.
I don't know that I would.
I've never used it because,
yeah.
like, when I started, when I got outside, just like having one W-2 and then like started doing more of this stuff, I was like, this is miserable.
Yeah.
Yeah. Let me just hire somebody to do this stuff so it's easy. But yeah. So what do we? Is there anything else we're missing about 2019 or 2020 as far as just like tax, like, not incentives, but like...
Yeah, the other one that's kind of been around but's changed a little bit with the new tax law is depreciation.
Okay.
So most people in the contracting world on equipment, they're able to write it off immediately. You get depreciation right away if it's above a certain limit, or you just expense it. But for vehicles, it's a big deal. So vehicles used to be sort of restricted in terms of how much you can write off in a given year. Pickup trucks are a different category. Usually you were always able to write off the whole amount, but now even things like SUVs, you can write off the whole amount, and it depends on the weight class of the vehicle, and a few other things. So I've had clients who are just killing it, and they're looking for deductions, and instead of continuing to drive their 08 Ford, they're saying, okay, well, I guess we can just go buy a $50,000 truck. It'll help us. We don't have to worry about, all the repairs and maintenance, and we get a $50,000 deduction this year, and wipes out our income. But now it comes down to the question of, okay, is that the best decision for my business? Do I really want to spend 50 grand on a new truck? Yes, then you can finance it. So even though you're financing and you're paying it over 5 or 6 years, you get the deduction today. So you play a little bit of a time arbitrage. It just depends on your situation, what's smart to do. I know you and I have talked about, you mentioned somebody posted a question in one of the Facebook groups you're in about, okay, do I pay off my credit card or do I invest in my business? And I'm always going to say, well, it goes full circle back to your numbers. because I don't know if saving $200 or $300 on your interest on your credit card is worth it based on where else you could put money in.
Right.
If you're going to take that money and you're just going to go buy a new car, just blow it on something on vacation, then you probably want to pay off the credit card and save that money.
Right.
But if you have that extra money and you could spend it on marketing and grow your business, well, then maybe you do a little bit of both. Okay. Right, so you pay a little bit of your credit card down, you invest in marketing, or you go all in on marketing.
Right.
But it's all full circle on, then are you going to get those leads from marketing? Are you going to convert them? Or are you just wasting money on the marketing side? If you're just paying Home Advisor,
right. Yeah.
Instead of Logan.
So that's kind of like why people have like student loans for so long, because it's like such like a lower interest rate that.
It depends on which camp you're in. There's the Dave Ramsey camp, which is like pay all your debt off, be debt free. But then you're starving yourself of cash, and then you have no investment opportunities. If you have no cash in the bank, you can't invest in anything.
So here's one thing that I've been getting more and more hip on, is that like the idea of that, like, you can have like a P&L that's like positive, but you can still have no cash. Is that just because you haven't like receive the money for it? Like, how does that work? Like,
so there's multiple pieces that go into it. One is absolutely if you have accounts receivable, meaning you invoice your clients and you give them terms, you tell them, hey, you can pay me within the next 30 days. You may have it show up on your P&L. Now we're going to get a little more technical. You and I have already had this conversation. You can have your financials on a cash basis, which means your P&L records everything when it hits your bank account. So it's not going to show up as income until you get that money from your customer.
Which is really like the real way that you should. I mean, especially for small business. Yes, like once
absolutely.
you're like large corporations, like that's why like with Dave Ramsey, like his whole thing about debt. I think he's not like necessarily 100% against debt. I think he's more so like most Americans can't handle debt.
Yeah, that's a different conversation.
Right. Yeah. So because it's because we just talked about this.
Right.
I actually just went and met Dave Ramsey a few days ago, and his place is like this. Dave Ramsey, if you guys don't know who he is, he's like this really big personal finance guru, but he has a radio station that he started off by just like seeing people like didn't know how to handle money, so he wrote a book, sold the book out of the back of his car for a while, and then now. I went and toured his compound, which is all paid off in cash because it would be a bit hypocritical. But yeah, it was like this immaculate facility. But his whole thing is pay everything off first, before and you don't need. I don't know if he's like against credit cards too.
I think so.
Yeah.
I think what you just said there is a lot of people don't know how to handle debt.
Right.
And therefore they get in trouble, and therefore they never achieve financial success. A lot of Americans die with debt. And so I think.
And what happens to that? I know it's like this is definitely not part of our call today, but what happens if you die with debt? Does it just get passed off to?
It depends on what kind of debt it is. Yeah. So there's different types, and it also depends on what kind of other assets you have. Usually, once you go through probate, which is the legal process of settling your estate, and if you do have assets, passing them on to heirs. It kind of depends on what the assets are and what the loans are. Usually credit cards will go away. Mortgages will not. The heirs can either assume the mortgage and pay it off, or you sell the house, pay off the mortgage, and whatever cash you have, you keep. Cars, same deal. You either usually assume the loan because that's actually backed by an asset.
Right.
The bank or whoever gave you the loan for the car can take that back and sell it and recover some of it.
Sure.
Credit card debt, what are they going to do? Medical debt, kind of, from my understanding, is it depends from state to state. And also who signed, when you were in the hospital, who signed that they're going to be responsible for your finances. A lot of people don't know this. You have a parent in the hospital and needs a surgery really bad. Somebody might come up to you and say, hey, here, can you just sign all this paperwork? Nobody reads it. More often than not, you'll see a paragraph in there that says, the family is responsible for this, especially if you're the one who's signing it as a financial guarantor. In that case, it'll pass on to you. So, always read. If you're unsure what you're signing, pay the few $100 to a lawyer. Have them review it. Nobody wants to write checks, but would you rather write a $1,000 check to an attorney, or would you be stuck with a $25,000 hospital bill?
Yeah, that's true. All right. So 2020 planning.
Yep.
What are some things that we could be doing out there to make sure that we're not, because most people, like with bookkeeping and with accounting, it's all reactive state.
Yeah.
Like, oh, I got to do this. What's something that we could be, what we should be doing instead?
Yeah, so the first thing is figure out what do you have and what do you want. Do you have a tax preparer who's a very good historian? They'll take what you give them and they'll put it on a piece of paper? Or do you want somebody who's a tax planner to help you proactively figure out where you are and kind of move things around before the end of the year? Again, it's going to cost you a few $100 to go talk to your guy or gal. And I know you had some frustrations. Your prior CPA didn't want to talk to you outside of tax season. I've seen a lot of that. I'd say a third to a half of my growth of the past year has come from that, where people are frustrated that they can't get in touch with their current advisor.
Yeah, I got the, just read the directions. I'm like, look, you charge me by the hour.
Yeah.
And I'm okay with that. You explained to me how it works, and they didn't want to do that. So that was like the final straw. But
yeah.
Outside the whole, like, now that I see like the other side of it where it's like, oh, did you know that if you have a home office? I'm like, well, like the Augusta rule where it's like, oh, by the way, and if you have a reactive CPA, because like, you know, if you go, oh, at the end of the year, oh, last year, did you happen to do 14 at home? Like, it's
the year's over.
Yeah, you're done. You can't go back and do it. So if you don't have a proactive person, I mean, just by having a CPA or somebody come to you and go, this is what you should be doing. I mean, right there, it's $5,000.
Well, $5,000 paid.
That pays exactly.
For 2 years of services.
Yeah. So you're absolutely right in that. So if you have a CPA that knows what they're doing, they should, like, it sounds like they should have at least like a little bit of like proactiveness where they could save you and everything that you're paying them to make your life easier.
Right.
You're end up just, it's net.
Yeah.
Yeah. Okay. So I didn't mean to
No, you're good. I mean, that's really what it is. And that's one of the main reasons I started my business, is because I saw that especially the older accountants had zero interest in providing proactive advice. They just wanted to crank out those 4 months of tax season and then just kind of cruise through the rest of the year. And I get it. Like, tax season's brutal.
Sure.
It'll wear on you.
Yeah.
So you kind of want to take off for the summer. But again, it's I think we're in a new world where we got to be more proactive and helping. So figure that part out. If you're okay with the reactive, you don't think you can be helped, that's on you. Don't complain about the tax bill you're going to write.
Sure.
Then from there is, okay, figure out these tax-free buckets. Can you get them? Then figure out for your situation, are there tax credits available? And that's a much more complicated situation based on, do you have anything else going on? Do you have rental properties? Do you have other business interests? Are you married? Are you single? Do you have kids? Blah, blah, blah. Then figure out before the end of the year, what else can you do today? So we have a couple more weeks left. Again, is there things that you're going to be paying for anyway in January, February, March that you can afford to pay now? And here's where I love credit cards. You can buy something in December, but you're not going to have to pay for it until 30, 40 days later. So use that time arbitrage to your advantage to get the tax deductions today so you pay less in April and push it off 30 to 40 days on your credit card. So what I'm talking about there is, for example, software. I just had a client who uses G Suite for her email and everything. I had her prepay $1,400 worth of G Suite for next year today, so that she gets a deduction on this year's tax return. She's going to use it anyway. She's got the cash. Pay it. It'll decrease your income. There's other things that you probably have going on that you can do. If you need new tires on your trucks, you need oil changes, inspections, get all that stuff done now. If it's your slow season, do it now. But it also goes into throughout the year, you got to save and you got to know that this is coming up towards the end of the year, because chances are every year you're going to be doing this. So prepaying expenses is the easy one. The second one, again, depending on your cash flow, you want to push off invoicing clients. And it also depends on if you're on cash basis accounting or accrual. If you're accrual, you got to book that income in December if you send that invoice.
Sure.
If you're on cash, it's when you receive it. So send your invoices towards the end of December. You're not going to get paid on those until January. So that pushes your taxes off a whole year. That's the other easy one. The depreciation piece. Is there equipment you need? Figure that part out. Do you need a truck? Can you afford a truck? Be careful with trading in. There's some rules on. You used to be able to do a tax deferred exchange. of vehicles. You can't do that anymore. So be careful with that one. And then to me, this is outside of tax and accounting, but find a sounding board to help you make decisions. Find somebody who is financially capable of helping you analyze your numbers, organizing it, putting it on paper, and helping you grow. And this is somebody that you should invite to your monthly meetings,
Sure.
So that you can have those conversations, that you can build that relationship, that you have somebody other than your spouse. I mean, my wife is great. She'll listen to me and give me guidance, but she also doesn't know everything that goes into my business. So have somebody who's got that experience, who can guide you to make those right decisions and help you succeed. That's really what it's about. And figure out, do you want a lifestyle business or do you want an actual business that has value that you can sell down the road or pass on to somebody down the road?
Sure. So it sounds like to figure all this stuff out, you kind of need one of those 4-hour days at your house anyway. So
At
you might
least.
as well get paid for it. So
Absolutely.
Cool. So it sounds like, just to wrap it all up, the home office travel time thing, that's kind of mind blowing to me. The Augusta rule is another big one. And then at the end of it all, just really have your shit together.
Absolutely. And it takes time and effort. I mean, the other podcast that we did together was number 28, Optimizing Your Growth, I think it was called. And there we talked a lot about how to do it and job costing and stuff like that. If you don't know how to do it, you don't have the time to do it. If you don't have time, that means you should have money. If you don't have money, that means something's wrong with your estimating, invoicing, marketing. You're not getting enough money.
Right.
And I'm a big Grant Cardone fan. He always talks about there's plenty of money out there. Go get it. So if you don't have money to pay somebody to help you with this, it's on you to get more money. And once you get that money, hire people who have those expertise.
It's totally true. All right. Where can people find you if they want to get a hold of you? And especially because you're like that. Like, I think it's awesome. Like, for as soon as you said, like, I have that template for like what the meeting should look like, I was like, damn, that should be a good like lead magnet. Yeah. So, but what's a good way for people to reach out and get a hold of you if they want to talk more about taxes and bookkeeping, anything like that?
Yeah, for sure. My number is 704-266-3738. It goes straight to my cell phone. Call, text. My name is a little hard to spell out. It's Edin Cuskovic.
How do you spell Edin?
Edin.
Yep.
And Cuskovic is C as in Charlie, U-S-K-O, V as in Victor, I as in India, C as in Charlie. And once you have that down, edincuskovic.com, you'll see me on there. And at the bottom of that homepage, there's a contact me form. Edin Cuskovic /schedule allows you to actually download a tax organizer as well as schedule a 45-minute time block with me. It syncs to my calendar. So if you want a specific date, that's the quickest and easiest way to do it.
Cool. All right, guys, if you're watching this on YouTube, hit the like button, and we're out. Thank you.
See ya.